For a broader look at the changing face of the labor market, let's welcome Jonas Prising, ManpowerGroup, Chairman and CEO. Thanks for joining us. Obviously, unions aren't normally what you talk about, Jonas. And in fact, unions, I guess union membership has been on the decline. I think it's recently maybe had a bit of a rebound. I know that the impression that people have of unions is at a multi-year high in the current environment. So I'm wondering whether you view this GM strike as a commentary on whether the labor market is tight and they feel they have some leverage at this point, or whether unions are back in a big way.
Well, if you look at the union membership here in the U.S. as well as in other parts of the world, union membership has been coming down significantly over the last decades. And I think this strike is a reflection of workers wanting to have, something back from many years of stagnant wage growth and what they see as increasing profits where they would like to take a bigger share. But I don't think structurally the representation of unions in industry has bounced back in any meaningful way here in the U.S. or in other parts of the world.
Do you think that what we're seeing now in the labor market is being affected by our issues in trade around the world?
When I travel around the world, we do business in 80 countries all over the world. We have 400,000 companies that we work with every year. As I traveled last year, because we started to see headwinds, especially in Europe and in European manufacturing about 12 months ago, the answer to that question was actually reasonably uncertain. Companies weren't exactly sure why they could see a softening. Today, as I travel across Europe, and I was in Asia just a few weeks ago, the answer is very clear. The trade wars and tariffs are having an impact on business confidence and are having an impact on manufacturing companies all over the world.
You're talking about here on a relative basis, we're much stronger, and if you had to say China, much weaker in terms of hiring. So there are winners and losers in the trade war.
Well, I would say that manufacturing employment actually in the U.S. has softened over the last couple of quarters, and we just released our forward-looking survey where we ask employers in various sectors across the world, here in the U.S. as well as in other parts of the world, how they're feeling, what their hiring intentions are coming into the fourth quarter.
Yeah.
And in the U.S., both manufacturing is one of the sectors that's the weakest it's been for the last couple of years. The same is true for China, which is also much weaker.
But U.S. is it says right, U.S. one of the strongest in hiring intent across all 44 countries. China, one of the weaker.
That's right. Now, within the U.S., though, one of the weakest sectors is manufacturing.
Okay, I got you. I hear you. But I'm talking about overall.
Yeah. No, overall, the U.S. is very strong. Japan is very strong. We see some good strength across the board. But I think as you look across the countries that we surveyed, 44 countries, what we can discern is a greater deal of volatility. So more countries are having a more hesitant outlook into the fourth quarter than they had just a couple of quarters ago.